Hello everyone, this is Shobha Rani R. Today I am going to take up the topic numerical problems on reconciliation of cost and financial accounts. When profit as per financial and cost books are given, the profit shown in the financial account was rupees 32,750 and for the same period the cost account showed a profit of rupees 50,000. Examination of the account showed the following differences. Marketing overheads recorded in both the books as rupees 8,000. Provision for bad debts recorded only in financial accounts as 5,000. Factory overheads recorded in cost books as rupees 8,500 and in financial account it is recorded as 7,000. Directors' fees recorded only in financial accounts rupees 2,000. Income tax paid recorded only in financial accounts rupees 15,000. Rent of owned premises recorded only in cost accounts rupees 6,000. Depreciation recorded in cost books 11,250 whereas in financial books it's recorded as rupees 12,000. Share transfer fees recorded only in financial book as rupees 1,000. Administration overheads recorded in cost account 5,000 and in financial books is recorded as 8,000 rupees. Reconcile the profit figures. Before we solve this problem, we have to observe certain important things while preparing a reconciliation statement. In an organization, when expenses increases, the profit decreases, then it has to be added to cost book. In financial book, it has to be subtracted. When expenses decreases, the profit increases, then in cost book, it has to be subtracted. Financial book, it has to be added. In an organization, when income increases, the profit also increases. Then in cost book, it has to be subtracted. Financial book, it has to be added. When income decreases, the profit also decreases. Then in cost book, it has to be added. In financial book, it has to be subtracted. From this information, we have to solve the problems. Ascertain the profit as per financial accounts. When the profit shown in the financial account was rupees 32,750 and for the same period the cost account showed a profit of rupees 50,000. Ascertain the points of difference between cost and financial account. Start with the profit as per cost accounts. Classifies the items as income and expenses. The first item given here is marketing overheads. Marketing overheads is an expenses whereas it is recorded in both the books, cost accounts as rupees 8,000 and financial account also it is recorded as 8,000. Hence, not required to reconcile. Provision for bad debts. It is an expenses amounting to rupees 5,000 is not recorded in cost accounts. This will have the effect of increasing profit as per cost book. Thus, in order to reconcile this amount of rupees 5,000 should be deducted from the costing profit. In simple words, expenses decreases, the profit increases, hence it has to be subtracted from cost book net profit. Next item, factory overheads. Factory overheads is an expenses in cost account showing a rupees 8,500 whereas in financial account it is recorded as rupees 7,000. This has the effect of reducing the costing profit by rupees 1,500 as compared to financial profit. Then, in order to reconcile, rupees 1,500 will be added in costing profit. It means expenses increases, the profit decreases, it has to be added to the cost book net profit. Next item, director fees of rupees 2000 is on financial expenses recorded in cost accounts. This will have the effect of increasing costing profit by rupees 2000 as compared to financial profit. Then, in order to reconcile, rupees 2000 will be deducted from costing profit. In simple words, expenses decreases, the profit increases, hence it has to be subtracted from cost book net profit. Next item, income tax paid. It is an expenses recorded only in financial books rupees 15,000 and not recorded in costing accounts. This has the effect of increasing costing profit as compared to financial profit. Then, in order to reconcile, rupees 15,000 will be deducted from costing profit. In other words, expenses decreases, profit increases, then it has to be subtracted from costing net profit. Next one, rent of owned premises. It is an expenses amounting to rupees 6,000 recorded in cost accounts, not recorded in financial accounts. This has the effect of decreasing costing profit by rupees 6,000. Then, in order to reconcile, rupees 6,000 should be added to the costing profits. Expenses increases, the profit decreases. Hence, it has to be added to the cost book net profit. Next one, depreciation in cost account is rupees 11,250 and that in financial account is rupees 12,000. This is an expenses and it has the effect of increasing profit by rupees 750 as compared to financial profit. Then, in order to reconcile, rupees 750 will be deducted from costing profit. In other words, expenses decreases, the profit increases, hence it has to be subtracted from cost book net profit. The next one, share transfer fees. It is a financial income recorded in financial accounts as rupees 1,000 and not recorded in cost accounts. This has the effect of reducing costing profit by rupees 1,000. Thus, in order to reconcile, this amount should be added to the costing profit. Income reduces, the profit also decreases, hence it has to be added to the cost book net profits. The last one, administration overhead. It is an expenses recorded in cost books as 5,000 and in financial books as 8,000. This has the effect of increasing costing profit by rupees 3,000. Thus, in order to reconcile, rupees 3,000 will be deducted from costing profit. In simple words, expenses decreases, profit increases, hence it has to be subtracted from cost book net profit. Finally, we have to prepare, with the help of the informations, we have to prepare a reconciliation statement. Start with profit as per cost accounts, 50,000. To this add factory overhead, overabsorbed 1,500, rent on owned premises charged only in cost accounts 6,000, share transfer fees 1,000. Together it comes 8,500. If you add up this to 50,000, then 58,500. Less provision for bad debts 5,000, director fees 2,000, income tax paid 15,000, depreciation 750, administration overhead under absorbed 3,000. Altogether 25,750. Resultant figure 32,750 is known as profit as per financial accounts. Thank you.